Business Morning on Channels Television. Let's talk commodities now, and I've got Amaka here with me in the studio. So good morning to you, Amaka. It's great to have you come in. So you're coming in at the same time as we're taking a look at the just released March inflation numbers from the National Bureau of Statistics. It's not quite in line with what FDC predicted.
Yes, the direction is the same, however, but the magnitude of the decline is quite small compared to the decline predicted by the FDC think tank, and this has perplexed most of us at FDC think tank and so many other analyst houses who predicted rates around what we predicted. But it also goes to say that we have to acknowledge the fact that this is the first time in months that core inflation, food inflation, urban and rural inflation have declined at the same time. So this is good news in the realms of inflation. But the magnitude of the decline, yes, has really...
Okay, yeah, because food index actually came down, you know, about 0.09%, and that's the welcome development, even though it seems very marginal. But I remember when we actually looked at the February inflation numbers, it was quite scary, especially as it came in at, was quite high, over 1%. But then... well, as you pointed out, it's most analysts' expectation. And how do you think that the market is going to greet this?
They are going to be excited in knowing that, you know, they could have been in a worse off situation, because we have to also know that inflation is the persistent increase in the price level. So even though there's a decline in the rate, that doesn't necessarily mean that there's a decline in prices. It only means that prices are increasing, but at a slower pace. So I think the market should be excited about this, but at the same time they're still facing the realities of the current prices that they're at now. So yes, everyone is happy but cautious at the same time.
Okay, so another issue that actually came up this week and we're tracking is the new policy on tomato that the federal government announced on Tuesday. So there's an increase now in the tariff on tomato concentrate. What do you think about this?
Yeah, so the increase to 50%, usually when you see countries increasing the tariffs and levies on imported products, they're trying to help their domestic producers and manufacturers grow. But at the same time, it's also good to attempt these policies with caution, because if you don't have the capacity to meet the needs and meet the demand, domestic demand in the economy, it can prove problematic and prices could start soaring at astronomical rates. But in the tomato industry, it's a move in the right direction, because we are producing under capacity. So right now the domestic demand for fresh tomatoes is 2.45 million metric tons, but then we are producing 1.8 million metric tons. So that leaves a supply gap of 650,000 metric tons, which we could easily meet up. So this increase in import duty would propel farmers and propel stakeholders in the industry to, you know, to produce at capacity.
Yeah, but how long do you think would it take for us to achieve that self-sufficiency that the federal government is trying to achieve? Even the domestic players as well, and even those who are quite keen to buy from Nigeria.
Yes, it's all about policy implementation and the way in which this policy is executed. So timing is of the essence. So it's all well and good to come out and say, okay, this is our plan, this is what we want to do, but then how you execute that plan is very important, and the wrong step may throw off so much work that you have done. Yes, so they have to look into what policy they're implementing and also the timing of things. Everything has to fall according to place, and then we could actually meet our... But
then, Amaka, you must agree that you have people who are in business because they want to make money. And so getting this policy coming out, it will be good news for some, but for others who always like to take advantage of the system, this is not very welcome news. So don't you think that this high import tariff could lead to higher incidence of smuggling, for instance? Do you see that happening?
Of course, it could. But then, and also to buttress that point, some manufacturers have invested a lot into technology that technology that makes use of a significant portion of tomato concentrate. So they are a bit thrown off by this recent development. But at the same time, it helps manufacturers who are not yet on that space to consider backward integration as a major way to reduce costs in the long run and improve their profitability. So it's a win-win, although the timing of the rewards may throw up some manufacturers, but it's a step in the right direction.
But then the immediate impact on market prices, for instance, or even the regular tomatoes that we buy, are we going to see anything like that? Because right now we still see the price of tomato not really at the levels that we expect, still above 10,000 naira for a basket.
Like I said, yes, it's a medium to long run effect. So you see the rewards after a certain amount of time. So yes, in the right now, you might see prices increasing due to this increase in the import tariff, but in the long run, we should become self-sufficient in tomatoes.
Okay. Well, thank you so much, Amaka, for coming on the program this morning and sharing your perspectives with us. Of course, we'll still continue the tomato conversation in just a bit with Channel's Business Insights of Bosun Omofai. But let's run you through some of the oil and gas stocks that we track here for you on the program. There are about 7 of them. So starting with corn oil. Corn oil continues to remain unchanged, even though we see activity on that equity. Yesterday, about 119,372 units were exchanged by investors, but the equity closed at 33 naira 25 kobo. Forte oil shed 58 basis points to berth at 44 naira 65 kobo. Mobil was also off 0.61%, but the only gainer from yesterday for the 7 oil and gas stock that we track on the program was Owando, I beg your pardon. Owando closed at 5 naira 48 kobo with a volume of 2.24 million units exchanged by investors. Seplat's shed 2.01% to close at 390 naira, with Total at 270 naira. So at the end of the day, the index came in at minus 0.62%. Year to date is at minus 5.6%, and dividend yield is at 2.1%. Welcome back.